On Wednesday, February 23rd, oil and gas giant Exxonmobil said its global workforce fell by 9,000 people in 2021. This was part of a deep cost-cutting program after the COVID-19 pandemic battered energy demand and prices. The largest U.S. oil producer has been restructuring, selling assets and slashing costs to boost shareholder returns after suffering a historic loss in 2020. Part of the company's asset sales are in Nigeria, Africa's largest economy, where ExxonMobil is set to close the deal on the sale of OMLs 67, 68, and 69 to indigenous energy company Seplat Petroleum Development Company. Today, February 24, 2022. Oil and gas major Shell is also set to sell its onshore assets in Nigeria's Niger Delta region. But as the oil majors exit their operations in Nigeria, there are environmental concerns about the decommissioning of aging oil infrastructure. One needs to look no further than the Nigerian National Petroleum Corporation ITEO joint venture OML 29 Santa Barbara wellhead spill in Nembe, Bayelsa State, which occurred for almost 45 days in late 2021. It was operated by ITEO, another indigenous oil company which purchased the asset from Shell. There are also questions around financing and maintenance of the assets. That being said, Uwa Usadiaye, Senior VP Investment Research for FBN Quest Merchant Banks, says the deal is good for Nigeria's oil and gas sector.
It's a huge deal. Nothing like we've seen before here in Nigeria, that's for sure. For Exxon, it appears focusing on deepwater projects is preferable. The firm has several big-ticket offshore projects currently ongoing, globally in different oil jurisdictions. So what does this mean for Nigeria, in particular Seplat? For Nigeria, with the continual IOC divestment, its energy security is increasingly firmly in its hands. Shell assets next, the proportion of indigenous output will progressively increase, and the big question will be financing the industry over the coming decade. For Seplat, this unquestionably is a game changer. Major hiccups in Q4 last year, but it seems the firm has successfully crossed those lines, so has got to the finish line. The question on everyone's mind here will be the structure of funding the deal itself, but it does appear Exxon HQ was desperate to get rid of these assets. Indicative pricing is north $2.5 billion last time I checked. Anyway, I think Seplat has had the most success exploiting divested IOC assets compared with other indigenous players. That, of course, does not mean others haven't done well, but only one firm is listed on the LSE. The hope really is that the firm has put its board troubles behind it and, gainfully work these assets. It's really huge for the firm.
For Arise News, Rotus Oddiri.